Let's say someone had a mortgage and 4 years into the 30-year mortgage, they decided to put a $5,000 bonus on their home loan. Over the life of that mortgage, it will actually save them over $9,000. Wow. So they're basically doubling the value of that windfall.
If you're thinking about buying a property, one of the first things you're going to want to know is, aside from how much can I borrow, is what your repayments are going to be. We've developed a repayment calculator so you can work out how much you're going to have to pay back to your lender monthly, weekly or fortnightly. I sat down with UNO's Head of Partnerships, Tim Bocock, to hear more about this exact topic. He's got more than 20 years experience in home loans and used to work as a mortgage broker. To be honest, I was expecting it to be a pretty dry conversation. I mean, come on, it's home loans we're talking about. But I actually learnt some nuggets of gold from Tim. So why don't we start off with just, if you could tell me, first of all, what are repayments? What are we talking about here?
So basically with a home loan, when you're borrowing money, you need to repay that and interest. And for most people, they look to do that over a 30-year term. So when calculating a repayment, it's based on the total loan amount and the term and the interest rate and a repayment schedule.
So say I have borrowed $500,000 from my lender, and I've opted to pay that back over 30 years and my interest rate is 4%. What roughly are my repayments going to be over a month?
You'd be looking at repayments of about $2,400 per month, which works out to be about $550 per week. But one of the things that people tend to do is pay their home loan off faster by taking their monthly repayment, dividing that by 4 and making that as a weekly repayment.
So if I switch to paying my mortgage off weekly as opposed to monthly, how am I saving money?
Okay, so let's say for example your monthly repayment is $1,000 and you were to divide that by 4 and pay $250 a week. And that adds up over a year. Well, you're going to make 52 repayments of $250, which actually works out to be $13,000 throughout the year. So you've made an extra repayment of $1,000.
Now, Tim, when someone is working out what their repayment should be on their home loan, is there kind of a magic number that people should be taking into account? Like, I should be able to afford 30% of my salary in repayments, for example?
Yeah, 30% is a good rule of thumb, but it really comes down to a person's particular situation. So the smart thing to do is to do a budget, to be honest with yourself about how and where you spend your money, and to use a mortgage repayment calculator to work out how much your mortgage repayments are going to be, and also what they might be if rates were to go up by, let's say, 0.5% or 1%. And make sure that you have a buffer there so that you can deal with any unexpected events should they come along.
Now let's say I get paid monthly at work, but I want to pay off my mortgage weekly. Is that doable?
Yes, certainly the lender will provide you with a monthly repayment schedule that you are obliged to meet. But most lenders will allow you to make repayments monthly, fortnightly or weekly. It's just a matter of setting up a direct debit so that you make the repayments when it suits you. I think it's certainly wise to make your repayment as early as possible, which for most people is the day that they get paid by their employer. So setting up a direct debit to make your mortgage repayment occur on that day is really good practice in terms of minimising your interest cost.
So if someone does happen to have, a big day out at the races, it's very tempting obviously to just spend that on a holiday or a big ticket item, but should people be putting that money into their mortgage?
If someone comes into some money, perhaps through an inheritance or a bonus at work, and they take that money and put it into their home loan account or into their offset account, that starts saving the money immediately. Let's say someone had a mortgage and 4 years into the 30-year mortgage, they decided to put a $5,000 bonus on their home loan. Over the life of that mortgage, it will actually save them over $9,000.
Wow.
So they're basically doubling the value of that windfall.
Now, Tim, for someone who has been paying off their mortgage for a number of years and then changes jobs or gets a pay rise, how can they best utilise that jump in their salary?
Well, a good tip is to take the majority of that increased salary and add that to the normal repayment. So as an example, if someone was to add an additional $400 per month to their home loan, that could save them tens of thousands of dollars over the life of the home loan.
Okay, so there's a lot of people now in Australia and worldwide who are working for themselves. They're part of this growing gig economy that we're hearing more and more about. If I am self-employed, do you have any tips for how I should make my repayments?
Well, certainly the same tips apply in terms of repaying as much as you can and as early as possible. Keeping in mind that interest is calculated on the daily balance of the home loan, and anything you can do to minimise that balance each day will help to pay the loan off earlier. What some people do is they run part of their business cash flow through their mortgage account in order to minimise the interest that they're being charged.
Now, you and I had a lengthy discussion the other day about repayments and lots of different elements of making repayments for the Cornerstone article that's on our website. And one of the things we talked about was the difference between an offset account and a redraw account. So let's talk about the offset account first. Is that something that everyone should have?
Look, I think it's a great benefit. An offset account's very convenient. It's basically a transactional bank account that's linked to your home loan, and the balance of that offset account is subtracted from the home loan balance before the calculation is performed each day on how much interest to charge.
Right.
So the greater the balance of the offset account, the less interest that you'll be paying on your home loan.
So someone who is married and both their partners are earning a salary, would you recommend they both put their income into that offset account?
So an offset account's a great way to minimise interest, and offset accounts and the redraw facility work mathematically the same in terms of minimising interest. What it comes down to is what's going to work for you from a practical point of view. So with an offset account, you have easy access to that money. So yes, it may be beneficial to have both incomes going in and all bills being paid from the offset account, so long as you have the discipline not to spend it. And if that is something that's of a concern, then perhaps it's best to put those extra repayments directly into the home loan, where they can be redrawn if you need them, but it's kind of out of temptation's way.
Which leads us to the redraw account as well. Who might benefit from having a redraw account as opposed to an offset account?
So as I said, mathematically it works out to be the same, and a redraw account allows you to build up a buffer in terms of being able to make repayments should something happen down the track. What a lot of people do is they save for, say, a holiday by making extra repayments for a year, knowing that they can redraw that when they're going on the holiday, and knowing that while those extra repayments are sitting on their home loan, it's saving them money.
Fantastic. So you can have your cake and eat it too.
Yeah, that's right.
I've heard about these things called repayment holidays. I have a friend who is about to have a baby. She's going to have to take some time off work to raise the child, and she's worried about her mortgage repayments. Is this repayment holiday something that is used for her situation, or is it used for actual holidays?
So no, it's not for an actual holiday overseas. Many lenders will allow a repayment holiday, particularly in that situation where a baby's been born and an income may be cut for a period of time. The holiday can be up to 12 months or 6 months, depending on the lender. And basically it means a reduced amount of repayment for that period of time. In that situation, it's important to talk to the lender, to be honest with the lender and speak to them early about your concern. They'll work with you. They'll want to make things work out for you.
It's good to know, because I think a lot of people sort of are under the impression that banks are a little bit evil or trying to take all your money, but it's nice to hear that they actually do exist to help you out.
Oh, look, I mean, yeah, they do kind of get tagged with that reputation, but when it comes to these sort of things, the banks are, they're going to work with you and make sure that things work out. They don't want to see anyone being in any trouble with their home loan, but you've got to do your part as well. You need to kind of be open with them and work with them.
Now, Tim, you've got 20 years experience in home loans and worked as a mortgage broker yourself. What's one thing that a lot of people might not realise about repayments, or what sort of tip that you could offer to people out there?
Look, the main thing is, as I say, whenever you have some spare cash, if you can somehow put that into your home loan that will save you money. There's other things like, for instance, if your repayment amount comes out to be $550 a week, well, why not round that up to $600 a week? You probably won't miss the $50 per week, but over a period of time, on an average mortgage of around $500,000, that can save you up to $50,000.